Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and whatever Trump and the administration are doing on any day. That is what is affecting all markets every single day. So that is what we're going to have to give some time and attention to, specifically Liberation Day, tariffs. We'll be getting into it today, amongst a couple of other things. We've got Liberation Day sending markets lower. Reciprocal tariffs were announced on all countries. Bitcoin dropped from 87K to 83. All kinds of other implications for the market, which we will discuss in a bit. We've got DTCC, the premier post trade market infra for global financial services industry, announcing a new platform for tokenized real-time collateral management. It's a bit of a mouthful, but it's kind of significant headline too. And we've got Camino announcing a swap platform on Solana, aggregating across all major routes, bringing real severe or serious competition across the Solana apps now, as they all seem to be competing with each other. So that is the final headline for the day. We've got also a bit of a general discussion on markets. We've got an explainer on tariffs. We've got some thoughts from Smokey from Chain on tokens. So we'll get into all of that and more today. I've got Legendary in the co-host seat with me. We're ready to get into it. But just a reminder, friends, that nothing that we say on this show is financial advice. The market is very risky, very unpredictable, and we don't know anything for sure. So please proceed with caution and exercise your own judgment after you've done your own research. With that out of the way, Legendary, it's Thursday. It's the 3rd of April. How are you doing?
GM, what a show to get into today. Massive news. Hope everyone is feeling liberated by this flood of tariffs that have been announced. I'm excited to unpack that. I'm not happy about the outcome, but like from an academic macro, did go to business school, did study macroeconomics. So from that perspective, I'm excited to see this, let's call it insanity, this madness come to life, but not very happy about the outcome. Nonetheless, I think it's going to be a super interesting show.
Me too. Specifically gave you that topic and no guidance today. Sometimes I'm for people who don't, for curious on like the behind the scenes strategies, like I'll set the topics for the show and then I'll give everyone a couple of links that I thought were helpful as part of my own research. Today's guidance for Legendary on the tariff conversation was nothing. There's nothing that I suggest, because the real reality was, it's not because there's nothing I suggest, it's just I had about 20 tabs open. I was like, I'm not going to send you 20 tabs, so I might as well, it's either 20 tabs or it's 0 tabs. So I gave you 0 tabs, just giving you the freedom to go in the direction you want. Any instinctive thoughts though before we get into the main stuff?
It's not looking beautiful if you look at the charts right now. And it's going to be some industries that are going to be massively hit. And I have prepared a little case study on something specific. So it's going to be very, well, let's say fascinating to look at. But instinctive thoughts are that this is such a complex mess that it will take a while to unpack. So while we did our research and we try our best to unpack as much as we can on the show, it's definitely a topic that we will have to revisit over the next couple of days and probably weeks and months as well.
Yeah. Okay. I had 2 instinctive thoughts. 2 instinctive thoughts were, one, is it as bad as we say? Like, if you're just looking at Bitcoin, which I appreciate, maybe no one holds, that's why everyone is so angry all the time. If you're just looking at Bitcoin, we're at the price that we were, in fact, we are higher than the price that we were 2 days ago, I think. Like 24 hours ago. Sorry, no, that's the wrong chart. 24 hours ago, we were, okay, that's a little bit ambitious as well. Maybe 3 days ago, something like 3 days ago, we were at 81K. And then for some reason, we just absolutely pumped into the meeting to go to 87. And now we've lost the gains and people are saying that it's so terrible, and we're at 83. And I put this tweet out yesterday. And again, we have said that all of this stuff is kind of above our pay grade and it's very confusing to make sense of. But if you just zoom out a bit, my tweet yesterday was 1 month of hysteria about tariffs and Bitcoin is at the same price. Looks like we're unwilling to go lower on uncertainty, which this move has been. So I put this out before the news yesterday. I thought, I said we would need something materially bad and unexpected now to go much lower. I thought more uncertainty, which I think is likely because if they have this max tariff, which everyone can then have the option to negotiate down, which just extends negotiation and uncertainty, means we can range more. I kind of articulated that thought yesterday on the show. I just put that into words yesterday too. I still think that to be the case. Yes, all of these headline numbers have come out on the tariffs yesterday, but I think I mean, you're going to do this in a little bit on the show. You're going to kind of tear some of them down and say they haven't been either. Not, it's not that they haven't been calculated properly, but they're kind of measuring the wrong thing potentially. And so there's a question mark against some of the numbers. But B, if they can be negotiated down anyway, then that extends uncertainty. So I just think we carry on ranging, at least for Bitcoin. But obviously, this is kind of bigger than Bitcoin. There's all kinds of other stuff going on. You will get onto those. The second thought I had, maybe this is a bit broader, is I don't know. I saw a lot of outrage, a lot of concern, a lot of unhappiness, which I think is justified in some ways. But I also think simultaneously, I tweeted this earlier, I said, we seem to be concerned about how much more expensive things are going to get now. And my thought is just like, we've been doing this already. Like we've been running up ridiculous debt, like for a long, long time. We've been artificially pumping property prices. Everyone's purchasing power has been getting cratered like for a long, long time. And so my only question mark is when people are using people like inflation as a argument against this, or that people's purchasing power is going to go down. It's like, I feel like that's been happening in a really, really aggressive way already. And so those specific arguments, I'm not attaching much weight to because I feel like they should have been made multiple times over the last decade if someone really wanted to stand up for those specific issues. There are all kinds of other things going on with tariffs, as you're going to get into, for kind of which will impact a lot of people in different ways. But those are just two instinctive thoughts. Obviously, we're just kind of coming up with this live. Curious for your thought there, Ledge, and then want to go to Funky with his hand raised.
Yeah, I think that's a very fair perspective to take, especially on the first part that we're gonna keep ranging. I've been reflecting that there's not much to trade in this market, at least for me. I told you I'm farming my airdrops, I'm farming my stuff, but why shouldn't I start to just trade BTC more actively? We've seen it often now. Obviously, there's no guarantee, but we've seen it often that whenever Trump is about to announce something, whatever that something is, and he announces a lot of stuff, we pump into that news like we did so yesterday to an almost absurd scale, going to 87, 88K almost. And then there is the correction after the actual information, the actual data is out. And that volatility, I'm right now completely ignoring. So I'm either thinking to trade that or to get more into liquidity provision so that I start to, I don't know, LP, CBBTC, and USDC on base or something like that.
Yeah, that would be, I mean, that as soon as you buy it, it's going to break out the range, right? As soon as you start LPing, it's going to break out the range. It's like we've watched it do the same thing God knows how many times now. That is almost inevitably what will happen, but that'll be okay. It's part of the fun. Funky, your hand is raised. Instinctive thoughts here on our early discussions of tariffs. Obviously, we'll be speaking about it a lot more, diving into the specific details. Early reactions.
I'm glad that you brought up that specific post that you put out yesterday, B, because I actually read it to Aaron this morning because I think it's so spot on. Like that, this is sort of fake outrage about the whole inflation and tariffs and things being more expensive. I'm just gonna say I'm a little bummed this morning because it didn't hit my limit order when it dumped, which I was hoping for to add some more BTC to the stack. But I thought, and just because we talked about Arthur Hayes yesterday, I know I dropped this in the Modern Market Discord server, but he had a little great post saying basically he doesn't expect anything different insofar as maybe the lowest it goes is 76.5, and we're going to probably just experience chop till now through tax day because. And Bread pointed this out yesterday, I think, on the timeline that people are going to have to sell their already bottomed bags in order to pay taxes if they didn't take any profits in 24. So that's about the only thing I can see for the next couple weeks. But otherwise, I'm just sitting pretty and stacking sats.
Like it. Like the idea of stacking sats. Just a quick point. Saw Oxy with a question in the YouTube comments asking if we were still farming Sonic. Someone else asked me earlier what we're doing with our airdrop stuff. Haven't tweeted about that stuff as much. Kind of been doing a lot of research on it, like figuring out all the new stuff. You know, periodically seasons change, right? You hit a bunch of wins, and then those wins are done, and you know you've got to readjust and reallocate over a period of time. One of the things we will be doing is posting all of the things we like in one place. It'll probably be in the Discord, and we're going to be opening that up to everyone. We've kind of just experimented with Discord first. It was something very small, and that's going to be opened up to everyone over at some point soon. And one of the core features of that will be this list of things where we're just going to keep tabs on what kind of protocols we like, why we're allocating in different places. You know, it's obviously no guarantee in any way that those things end up working, but it's just so other people can keep an idea and have a sense of what we like at the moment. So I think that'll be helpful to people. We'll share more information on that when we have it, which we do not at the moment because we're building it. Getting into main stuff, let's do it. It's got to start getting into it at this point. The majors, what is going on with the majors? We have Bitcoin is down a couple of percent to 83K. Let's just, oh, yep, there we go. So down a couple percent to 83. ETH is down 4% to, damn, it's lost 1.8. It's at 1.796. 1796. We got BNB up down a percent to 594. Sol is down 8% to $116. Sol got hit a little bit harder out of those. Getting into the meme coin side of things, we have Doge down 7% to 16 cents. Pepe is down 6%. Trump is down 13%. Bonk is down 10. SPX, Murad's coin is down 16. Fartcoin is down 28. You want to trade something just in a range, Legendary, with a bit of volatility. Fartcoin leads everything every single time, up to the upside and to the downside. So maybe take a look at that. WIF is down 12%. Pengu's down 8%. Pengu's down 32% in the last, is that 7 days? Yeah, 7 days. Okay, well, what else we got? AI16Z is down 15%. Popcat's down 15. Mog is down 8. Turbo red. Everything's red. So nothing else to say there. Getting into the main headlines themselves, we have where are we? We've got Liberation Day sending the markets lower. Reciprocal tariffs were announced yesterday. Legend is going to break down everything you need to know from that. We've also got DTCC, the premier post-trade market infra for the global financial service industry, announcing a new platform for tokenized real-time collateral management. I think we'll have some time for these other things. We'll see. I probably want to stick on tariffs for the majority of today's show, to be honest. So let's see how we go. And then the other big headline, which I thought would be interesting for people, whether we get there or not, for a bigger discussion, is Camino announcing a swap platform on Solana, aggregating across all major routes. Seems like every single app on Solana basically wants to do the things that all of their competitors do as well in order to try to capture all the market share. So that's the kind of hyper competition that's happening on Solana at the moment, which is interesting to note. Some notable price action, as I said, Sol's down 5%, Hyperliquid is down 10%, dipping beneath $12 for the first time now. Fartcoin down 22. On the NFT side, Memeline Captains was down 15% to 0.65 ETH. All the NFTs were red. That was the biggest mover. Legendary. Anything else we should keep up to date with on the NFT side?
Yeah, I mean, you took it away. All the NFTs have corrected down, with one notable exception, which we have touched on yesterday, and that is the steady teddies. They are holding up pretty well. They are still sitting at 108 Bera. Winters are still up around the 10x on that, and despite that massive pump, they haven't seen a massive correction. They're actually up another 8% over the last 24 hours.
Interesting. Steady Teddy's going pretty strong. We spoke about them yesterday as a headline. Okay, that's pretty cool. Getting into the rest of the news, keep you up to speed. You might have missed this stuff in all of the tariff mania. We've got OnlyFans founder and HBAR Foundation, which is in charge of the Hedera crypto treasury, bidding to buy TikTok. What kind of world, what kind of madness is this? But okay, that's fine. That's what is happening. We've got Jupiter Exchange expanding into NFTs by acquiring Drip Labs. Jupiter, on a tear really, just trying to expand its footprint on Solana. CoinList begins US token sales again with 00 sale after what they described as a difficult chapter in American crypto history. I think they had to stop token sales, even to accredited investors in the States, for a while because of the regulations, whereas now they're starting them again. FYI, that 00 protocol is pretty interesting, backed by some very big people. I think the only way to get in is if you're a validator, though. Worth double checking. I haven't looked into it more. If I could participate in that, I would, but I don't think I can. Fidelity launches crypto-focused retirement plan, letting investors trade in crypto. Say announced its development foundation will be headquartered in Manhattan, New York. A lot of business moving back to the States. FTUSD depegged to 87 cents after Justin Sun claimed they weren't solvent yesterday. The peg restored very, very quickly after, and seems like whoever bought that dip was quickly rewarded. MetaMask announced gas fees can be paid in token swap currency instead of ETH. Not ideal for ETH. I guess you now don't need to hold it, even though the swap still uses ETH because it's needed as part of the transaction, but you just don't need to hold it anymore. So that is that. That's the Web3 Roundup to get you up to speed with everything else that's happening in the space in the last 24 hours. Before we get into the main tariff stuff today, because I think that is where everyone's attention is going to be. That's where we have the majority of takes for today. What is catching your attention from around the space?
Definitely the TikTok news. I feel like let's not touch on tariff related news because the show's going to be heavy enough. So let's get into the TikTok stuff actually, because A, we talked about it on the show, and B, the situation is this: Donald Trump has said that the U.S. business of TikTok has to be sold, can't stay in ByteDance's control, and that transaction should have happened by January 19th. They extended that, Donald Trump did, until April 5th. It's likely that there's going to be another extension because it's still not clear if ByteDance is even willing to sell. There's obviously a plethora of people interested. You had mentioned the OnlyFans founder, you had mentioned the Hedera Foundation. Amazon is also interested and has allegedly submitted a bid too. However, we still don't even know, even if there's willingness to sell, what that will include. So is it just the US part of the business? And that's where it gets interesting. Or does it include the algorithm, the algorithm that basically is distributing the personalized videos and ads? And analysts have looked at the different valuations to see how much would it be worth without and how much would it be worth with the algorithm. And that difference is massive. So just that you get an idea where the value actually lies. Without the algo, most analysts say it's 40 to 50 bill. So quite significant, but not a like absurd amount of money given how relevant and how big TikTok is. With the algorithm, if that is a part of the transaction as well, 300 bill. So you can really see where the value lies. It's not only the users, but actually the majority lies with the algorithm.
Yeah, I think that makes sense. One of the things I think I listened to one of the investors say, I don't know if you just mentioned it when you started that, is that a lot when Trump was saying that you have to divest, I don't know if that's the right word, that when they had to sell the US part of the company, I think the original investors weren't too concerned because the China side is significantly more valuable. Is that something that you've noticed, or is that something you're aware of as well?
Yes, because it's not the China side only, it's the rest of the world side as well. And I think that initial assumption had included the fact that the algorithm entirely stays with the Chinese side, so with the original part of the business. But apparently this is unclear how that transaction, if there's going to be a transaction, will shape out.
Okay. Interesting stuff. Yeah, glad you took that. What about the completely random the completely random collaboration between OnlyFans founder and HBAR Foundation? Like, where's that come from? Just presented with no explanation. Who knows? I don't know. I just thought that was kind of funny. These two disconnected groups of people connecting in order to just buy TikTok.
I loved how the Austrian media have titled that. They said Amazon, the porn industry, and crypto bros all want to buy TikTok. That was the main headline in one of the Austrian newspapers.
Beautiful. Just trying to get those clicks. I see.
Just Stefano is saying we went from gym routines to OnlyFans. We are really down bad.
Yeah. Down so bad that they're the only people that can afford anything at the moment. allocated to the wrong industry. So we've got a couple of other cool things. Something that caught my attention. What do you think about this? I feel like this is happening more on Solana. So there's two connected pieces of news. One's a headline, which I don't know if we'll get to later, so we'll do it now. And the second was presented in the later news. You've got Camino announcing the swap platform on Solana. Pump Fun also the other day, they are doing. So Pump Fun obviously existed as a meme coin launchpad. Then they went into they went into Radium's ballpark by trying to take the business from them there. They then had the swap platform. Camino was a lending platform. Now they want to be a swap platform. Jupiter obviously started with swaps and aggregating, and have subsequently expanded into, well, they're either part owners of Meteora or complete owners of Meteora, which is the place where people go and provide liquidity on Solana, and the one that was implicated in all of the stuff with Kelsey Ventures and the Libra coin and all of the scam coins, but also a bunch of other completely legit coins as well. Drift is obviously in that universe too. And so Jupiter has also just bought Drip Labs, which was the creative Drip house, in order to expand into the NFT universe. Because if you think about it, they didn't have a platform to be able to do that. Two questions here. One, do you think that all of this, do you think it's possible for there to be this all-in-one? Because I think a lot of people have tried. Remember when Coinbase wanted to enter the NFT market? You had FTX actually even had an NFT thing at some point in time. People might not remember that, but people try to be the all-in-one place, and I think it's actually really hard. And you think about the successful protocols on ETH, something like Aave, and there must be some wisdom in what they decided to do. They're like, look, we're lending, and they've just absolutely nailed lending, like over and over again across every single chain. They expand to all of the L2s as well. There's probably some wisdom in sticking to what you're best at and creating your brand around that. So I guess my question is twofold. One, do you think it's possible to become the all-in-one? And two, why do you think it's on Solana at the moment, where everyone seems to be trying to take it all at the moment? And does that have some negative impacts for all of them in the process? What do you think?
I mean, there's two things that are true at the same time. On the one hand, most of the stuff that is being built is not unique. So if you build a swap platform as extension of whatever your business is, I'm going to build my own swap platform as well, because it's pretty easy to do that, and you can also fork code to do that. And then the second thing, which sounds like a contradiction, but it's not. If someone builds something truly unique, so you actually come up with the better swap, and for whatever reason I cannot build that, I'm going to aggregate it. I'm going to build an aggregator on top of that. And that happens and has happened on ETH for the longest time. If you go to DeFi Llama, you have an aggregator of aggregators, even for swaps. That is basically the meta aggregator. You have a Borrow aggregator that looks at Compound, Aave, and so many more platforms. Aave now, I think, has this unique position in the market because it's so robust. It's so old. It has, quote unquote, withstood the test of time in crypto, which means a lot to many people. And then therefore they're willing to forego a bit of an additional yield when it comes to parking like the more conservative side of their capital for lending or borrow purposes. And I think it's just natural to see the same evolution happening on Solana. We've seen obviously the hype with the meme coin trading that has settled down, but the chain is still alive, still functioning. Transactions, of course, are still happening. And now I feel like it's the time to look left and right and see, okay, what is my competitor doing? Everyone's integrating a swap. Let's aggregate that. And that hyper competition, I feel, is a result of the open nature of blockchains. And to some extent, I do think it is healthy to have that. And I also do think that there's going to be an all-in-one platform, because ultimately you kind of have that with DeFi Llama already, right? Protocol and do everything that you want to do there? And why not have the same for Solana as well?
Interesting. I think the interesting thing I've observed is that even between chains, it's been impossible to get people to trade in one place. It was like Magic Eden became the place to trade ordinals. Solana was the place to trade. Tensor was the place to trade Solana NFTs. Blur or OpenSea were the main NFT marketplaces for ETH denominated NFTs. And even though everyone kept adding more possibilities for people to do stuff, like it was just not possible to get people to change. There was that kind of brand loyalty almost to the chain. So I think maybe this approach is better, where you're trying to capture that activity within the ecosystem. So because Jupiter is so Solana focused, it's like, well, okay, well, let's try to take the Solana NFT ecosystem too. So I think there's probably some merit there. But I don't know. These other teams are like super well designed, and I'm not sure. I'm not sure about the super app thesis, to be honest. I think there's enough evidence to suggest we like things to be built out slightly differently here, for whatever reason. But look, I think what we want to do, we want to get into the main tariff stuff. That's the key headline for the day. But before we get there, so there's two things we're going to do. We're going to get into the tariff stuff, and really analyze everything that you need to know in terms of the details, plus our thoughts and the implications. And it's going to be a bit complicated. But before we get there, let's hit our sponsored segment for today. We've got our Polkadot explorations, where we are routinely checking out what is going on Polkadot. And this is a cool one. It's got a little bit to do with AI, Legendary. What have we got here?
Yeah, absolutely. This week, we're diving into Neuroweb AI, which is a decentralized knowledge network bringing AI directly onto Polkadot. And Neuroweb AI is all about turning data into valuable and verified knowledge right on chain. So the concept behind Neuroweb is pretty cool. Think of it like knowledge mining. Instead of mining blocks like Bitcoin, you earn Neuro tokens by adding trustworthy data called knowledge assets to the blockchain. And those knowledge assets can be a lot of things, ranging from a digital certificate for physical artwork to verified pieces of information, or just verified data where you can be sure that this data is accurate because it has been verified before. And up to now, more than 60 million knowledge assets have been minted so far. And just to be a bit more specific about Neuroweb per se, it is a parachain, but not just anyone, because in the last 365 days, more than 140 million transactions took place on Neuroweb in its best month. That was November 2024. Neuroweb actually made up 77% of all parachain activity. And even in March 2025, or April 2025, actually, Neuroweb still processes 300,000 to 500,000 transactions a day. But why should you pay attention to this? Because verifiable knowledge matters in so many sectors, whether it's decentralized science, AI-driven fintech, secure data sharing, or even transparent supply chain tracking. To look at one practical example that's already live, that is the Polkabot AI, which is an AI-powered chatbot that answers all of your Polkadot-related questions and exclusively is using Neuroweb's decentralized knowledge base to do so. And you can try that chatbot yourself by visiting polkabot.ai. I think it's pretty cool to see how Neuroweb is bringing knowledge on chain on Polkadot. And thanks to Polkadot for partnering with us for our weekly explorations.
I like it. I like the integration with the AI stuff. In particular, today, Funky, your hand is raised, resident Polkadot expert, amongst other titles. What are your thoughts here?
No, I was gonna say Neuroweb is really cool, and that bot is awesome. What surprises me, however, is ever since they did the post TGE Kaito Yapper board leaderboard thing on Kaito or whatever, so many people who know nothing about Polkadot just keep talking about this stuff from like 3 years ago that doesn't even exist, or we've moved on from, or whatever. And I'm thinking, like, you could just go to this bot or even the website and find out better information. But yeah, great job of covering Neuroweb. It's really impressive what that chain's been doing.
Yeah, that's a good tip. All that Kaito stuff's been pretty interesting. That's probably something to reflect on for another time. But the fact the fact that you've got all these rewards now has definitely changed the dynamic and people's perception of Kaito. Now that it's all so much more formalized, I think it's kind of turned into something which, well, I think it's basically turned unpaid accounts into paid accounts when it becomes kind of obvious that you're kind of doing it in order to receive a reward. And I think creators, just more generally, before we get into the tariff stuff, need to really think about the proportion of which your posts are chasing rewards versus the amount of posts which are, just genuine, authentic, normal posts. I think that's wise to keep in mind as you are going on your creator journey. Quick digression there, but look, we wanted to get into the main headline now. Probably spend the rest of the show on this, to be honest. Ledge, I gave you no guidance today on what to go for when it comes to the tariff news yesterday. What do we need to know? What are your thoughts and what are the implications?
Absolutely. Yesterday, President Donald Trump proclaimed April 2nd as Liberation Day and did unveil a series of unprecedented, massive tariffs that sent the stock markets and cryptocurrencies into a bit of a tailspin, to be honest. The new policy is imposing a universal 10% tariff on all imports effective April 5th, with substantially higher reciprocal tariffs targeting specific nations. China faces a total tariff rate of 54%. European Union and Japan are subject to tariffs of 20 and 24% respectively. And these increased rates are scheduled to be effective from April 9th. So what did the administration do to come up with those numbers? And there's been an article in the Financial Times that said there is some method to this madness because they call them, quote unquote, reciprocal tariffs, which would imply that this is exactly the tariff that the other country, for example, Switzerland or Vietnam, had imposed on the US, but that is not the case. They came up with a specific formula, which the Financial Times had reported on. So first step is you assess the trade deficit. Basically, you determine the US goods trade deficit with a particular country. That means, is that country exporting more to the US? Is it importing more from the US? And the trade deficit exists from the US's perspective. If there's more exports happening from the other country than the US are exporting to that specific country, then you divide the trade deficit by the total of US imports from that country and obtain a percentage. You halve this percentage to set the tariff rate. If we look at an example for that, for example, Bangladesh, US imported $8.4 billion of goods from Bangladesh in 2024, giving it a $6.2 billion trade deficit in the country. That is 6.2 divided by 8.4, and that is 74% divided by half. And you come up with the tariffs that have been charged for this particular country. And this very abrupt nature of this announcement, plus the intensity of the tariffs, has led to significant volatility in global markets. In Asia, Japan's Nikkei 125 index is down 3%, Hong Kong index down 1.5%. European markets, in particular Germany, the DAX have declined as well, 1.4% for the German markets. UK FTSE down another percent. S&P 500, Nasdaq 100 fell over 4%. So, and obviously cryptocurrencies, Bitcoin, ETH, etc., are down as well, as we had reported on that. The key takeaway before I get into some additional data is the tariffs have exceeded all expectations. JP Morgan's Michael Ferroli said that based on some static calculations that they have been running, the US could generate nearly $400 billion in taxes. That would make it the most significant tax increase relative to GDP since the 1969 Revenue Act. And looking at inflation numbers, they project that these tariff measures could elevate inflation by another 1 to 1.5% and basically raise the average effective tariff rate from a global perspective to 23%, which would be the highest level in the last century. That is it on a headline level. I have some additional bits and pieces to get into because, as you said at the start of the show, depending on the industry, you said BTC has been ranging for a while, but for some industries, this is really significant. And I want to take a look at Nike because Wall Street, obviously, both companies, investors, they have been reacting strongly to that. And for Nike specifically, they said the stock is uninvestable now because, like many apparel brands, sportswear brands, shoe manufacturers, they do manufacture in countries like Vietnam, in China, et cetera, which have some of the highest tariff rates from that. And for that reason, the analysts went as far to say that those companies right now are uninvestable. There's no sensible way to buy this stock right now, and the market has been reacting to that quite strongly. Taking a look at Nike, that is down 9.5%, almost 10% on the pre-market. So it's not only the case that the overall stock market is down, that crypto is down, it's also the case that you have industries that are very strongly affected by that. And also, like from that Financial Times article, which has reported on quite some good data, that they went as far to say they renamed it. It's not Liberation Day, it's Libation Day, because after those announcements, you really need a drink to process what is going on.
Okay. Fantastic summary. As you said, there's a lot of stuff to digest there, and it's not going to be straightforward to do that. I think we'll probably need some more time. A couple of quick ones from me. I'm going to come back to you with a question, and would love to get Stats's thoughts in a second as well. He's just joined us, so I'd be very curious to hear his general reflections too. One thing we were talking about was the importance of the information, right? So the headline numbers that were being given for these tariffs, from my understanding, based on what you just shared and the conversation we had before the show, is that they're basically just wrong. Like, that's not the percentage tariff that is supposedly being levied against the states is actually something that is calculated to do with the surplus that they're running. Is that fair? Do you want to just like explain from your understanding what you are taking away there, and what people should like get a sense of where these numbers are coming from, what's right and what's wrong?
Yeah, I think from Donald Trump's perspective, he's looking at the trade balance and he's saying, what is fair if the US is exporting the same value of goods to Germany, then Germany is exporting to the US. If there's an imbalance and if there's a trade deficit, that is not fair. And that is basically what has been happening around the world, because the US is importing so many things, so many goods and services. And this is the calculation basis that has been used for a tariff. So it's not saying they have a 20% tariff against us, so we're just going to do the same. It's saying the fairness lies in the balanced trade, well, in the trade balance being at zero, in no deficit, no surplus. And if that is not the case, if there is a deficit, this is unfair, and this is the basis for the calculation of how high those tariffs should be, in President Donald Trump's opinion.
Got it. Two initial thoughts on that then is that it's almost impossible for other people to balance that in a sense, because they don't have the market that the US has. So obviously there'll be more things going towards the States because it's the bigger market, I would have thought. But
yeah, that's like the feature of a global economy. Like, take a look at a small country like Austria. We are exporting a huge amount, and so is the entire European Union, of semaglutide, which is Ozempic, basically. And the US is a massive buyer of Ozempic, and Austria is exporting a lot of Ozempic to the States as well. And we are importing some things from the US, but we don't need to import everything from the US because we're importing from other countries as well. And that is kind of the idea of globalization, that you have a market where everyone can trade with one another. And it's not a bilateral relationship where I give you $1 billion of goods and services and vice versa, import the same amount from you. But this is how Donald Trump wants to look at it.
Okay. So I think that was a helpful thing to clarify. The second thing I was going to say, and we don't know, we haven't had the time to research this deeply, but a couple of things could be true, right? It could be true that, okay, the way that they've calculated it is from the surplus, but they could also have had a tariff as well. And it's definitely true that there are a number of countries who tariff the States more than, well, maybe the States don't tariff them at all, or they definitely do have tariffs and I just think just some people were suggesting that, okay, the numbers are terrible, they're all wrong, that's how it's all been done. It's like, okay, but there could also be tariffs in addition to that. So there's just like, I just wanted to counterbalance that quickly. Did you say you wanted to go in another direction, or I think let's go to Stats first to get his reaction. Stats, welcome to the stage again with us. Good to have you back. How are you making sense of what was going on yesterday?
I'm no expert on this stuff. My sense is that I think there was always this doubt that Trump was really going to be so wedded to these tariffs, and at least when I went into this administration, from kind of just like where I was putting my money perspective, at least in the first term, I always thought that Trump prioritized stock markets and asset markets. And I thought that was one of the main scoreboards he used. And I think that what we've seen in the stock market and in the correction since his inauguration is the market starting to digest that that's just not true anymore. And one thing that's very, very clear is that this market does not like tariffs. Now, I don't really understand the 5-year case for this, because a lot of like the JD Vance theory of things is that, slowly or even quickly, manufacturing is going to come back to the States and we're going to derail NAFTA. But the only reason, NAFTA is one example, but we're going to derail all this kind of Nike makes their shoes in Vietnam. They're going to start making them in America. But if you're Nike, when you look at the way that Trump has treated these Canada tariffs, for example, which is kind of in just 2 months gone up and down multiple times, to move all your manufacturing here, you have to have faith that this is like a 5 to 10 year commitment. And so he hasn't even been consistent on the way he's treated Canada over the past 2 months. So I think there's too much. He's too fickle about these in the past for a CEO really to do the big picture things that he's asked for. And furthermore, when it's all done by executive order, it can all get unwound by whoever the next president is. So I don't know. I think the big picture goals don't make a whole lot of sense to me. But I think it's clear right now that stock markets aren't his priority, and that is a huge difference from the way the market viewed him just 2 months ago. And who knows what will happen? Who knows if he'll? It feels like he's getting deeper and deeper entrenched into this, but I don't know. It's I think that's kind of what you're seeing in the price action. It's just people being like, "Whoa, this is actually not." We know he talked about this, but I think there was just, the all-in guys always say take him seriously, but not literally. And here, the strategy was just to take him very literally, which I think was a surprise.
And this is exactly the problem, right? Stats, you said perfectly. You don't know how sustainable this is going to be. So no company in their right mind is going to be like, let's change our entire supply chain to produce in the US, because we just don't know how long this is going to be a thing. And that then leads to basically stagflation, where there is, growth is stagnant, but at the same time, inflation is increasing because you are raising tariffs, which again, as we said, should lead to like 1 to 1.5% additional inflation, according to JP Morgan's math on that. And then the other thing really is, if you ask yourself the question what it means for the strength of the dollar, typically, like in macroeconomics, you would say imposing tariffs, making imports more expensive, improving trade balance should lead to a stronger dollar. But what a lot of experts have also been saying is that this entire math and those models have never been done with tariffs at that scale, because there's like so many more effects coming into place, as market uncertainty obviously being one of them, that the retaliatory measures that can be taken, exactly this company sentiment of not knowing how sustainable this is and will we adapt supply chains for that, led to the point where a lot of people have been saying it's like impossible at this point to determine if this is going to weaken or strengthen the dollar. Because again, in theory, simple tariffs should lead to a stronger dollar, but because this is at an unprecedented scale, it has become impossible to say what's going to happen. I feel like this caution needs to be applied with all of the math that we are seeing around that. So that's some like static calculations that, again, JP Morgan did, but what they cannot factor in is how other countries are going to react to that stuff and how that will affect inflation again.
Go on, Stats.
Oh, I didn't really. Carry on.
Okay, I thought you came off mute. I thought you wanted to continue. One thing on that before maybe we consider some of the further consequences. I think you mentioned supply chains there, Legendary. Balaji had this tweet, which was on top of where he shared this point where he said, this is nuking every single supply chain that passes through the US in any way. And this ties into the point that Sam was making, which is like the time frame. Like if you were a leader of one of these companies, what are you supposed to do today? What are you supposed to do tomorrow? You can't actually take action on any of the stuff because everything's been so fleeting that any decision that you take would be potentially changed by next week. And these are like decade-long decisions that they're asking people to take. And so Balaji's point was, this is going to nuke every single supply chain that passes through the US in any way, under the illusion that 45 years of deindustrialization can be fixed in one day of 45% tariffs. In his opinion, he said countless low margin businesses, including US exporters, will be pushed into unprofitability. But I think that point on timing is something which makes sense to me, because how would you reasonably or foreseeably make a concrete decision about the next decade when everything has been so hyper volatile for so long? I think you'd be very hard pressed to make a meaningful decision in the next few days, right? But Legendary, you spoke about reactions to this. You spoke about other countries, what they might be up to. Obviously, no one knows, and we don't have a good sense of what people are going to do. In any of your reading, what was your kind of sense of how different people are reacting? What are your thoughts in that direction?
I think to answer that question, let me bring up a chart first, just to get a feeling of how big this increase is. So what I'm sharing on the screen is the average tariff rates on US imports over the last century. And as I said, like this is a century all-time high for the effective tariff rate at like 22, 23%. And in this chart, you can see how it's been declining over the last 100 years, with the exception being the time before the Second World War. It has been going down and down and down. And in 2024, we had an effective tariff rate of 2.4%. And that basically 10x'd with this one Liberation Day announcement. So this is how massive this has been. And for that reason, the answer, at least what I can read, say from the European side, is that before that, there's been a lot of like discussions how the EU is going to react to that and what they're going to do, and a lot of planning. But now seeing how basically extreme all of that is, there is no clear answer yet. I think China has been a bit stronger in its response, saying that they are both ready to talk, but also ready to have retaliatory tariffs going on. But the EU, for example, does not have a good answer to this right now. I feel like a lot of countries, including Germany, who's been hit definitely harder as a country that is exporting a lot to the States, is doing the math on what it means for their basically deficits and how it will affect their economy. But also because there is a series of exceptions to that. And I had mentioned Ozempic before, which is something that we're exporting to the tune of billions of dollars to the US. That was a bad example because there is an exception for pharmaceutical products, for medicine. There is also exceptions for certain services. So because you have this massive tariffs, but you also have exceptions for them, and they're at such a large scale, I don't see a clear response from many countries at this point in time. And I think it will take a bit to have this response.
Okay, I think that's fair. I mean, ultimately, we just have to see how people respond. As we draw towards the end of the show, we've got like 5 minutes left, probably go in two directions here. Stats, did you want to come in first?
I was just saying what Legendary is talking about is part of the problem. It's that you have these exceptions both for countries and for companies and for products. And ultimately, it just has to make you bullish on the administration's power and the potential for corruption, because everyone now is going to be wanting that meeting where they can try to get their exception, where they can try to get their exemption. And, maybe that's bullish Trump quit. Maybe maybe that's the avenue of corruption that happens here. But the market's not saying that because Trump coins down 13%. But like that, I don't know. And there are all sorts of different ways to try to figure out who this benefits and what this benefits. But I think that the amount of corruption we're about to see as people try to do favors to get their exceptions, it could be out of control. And maybe it won't be. I mean, maybe this has nothing to do with that. But I think that when you start seeing that, it literally just becomes one person or one administration deciding who gets benefits and who doesn't. And it's in such a massive way because it is the entire American consumer base that is the lever here. So I don't know. It's a little, we'll see what happens.
No, I mean, it's a fair point. And I think that cloud has kind of hovered over this administration, frankly, especially as it relates to the various crypto activities that they've decided to participate in whilst passing the very pro crypto regulation. So I think it's a fair question to ask. In terms of two directions I want to take it in the last couple of minutes, might run over just a little bit. In terms of who it's supposed to benefit, this is my kind of open question. I don't know the answer to this question, but to the extent that, this stuff is supposed to benefit the American working people. And I know that I've even had some comments already on some of my tweets from earlier saying none of this is helping anyone. This is all going to be bad. It's like, okay, that's a criticism of the policy. I can see that. But I guess the question is, to the extent that all the stuff that was going on before, the policies which had led to, I don't know, all-time high stock prices, unaffordable property, all-time high consumer debt, all-time high student debt, all of these things that have been happening at the same time, and people's purchasing power just getting absolutely wrecked in general. This is like I don't know whether it's a 2-decade-old trend, a 1-decade trend, or just that something's been trending towards in any way. The debt was and is spiraling out of control. This is something different. It is definitely something different. And so the question is there any merit to trying to pursue something which is different in order to try to address some of those things? We might disagree with the execution and question some of the motives in different ways, and maybe certain things open the door for potential corruption, potentially. But is there any merit in trying something else in this way? Because what was going on was not sustainable. The debt was going out of control, and this might be a way to tackle it. Stats, I think you came off mute. Open question there. We'll be curious for Legendary's thoughts too in a second.
Yeah, I mean, and look, Besant talks about this. They talk about how the ERS, the External Revenue Service, is going to replace the IRS, and it's going to. Yeah, I mean, Trump. I think Trump really believes in this stuff. He talks about how every time asked, he talks about the economy is going to be so strong people won't know what to do. And if you're trying to be as generous as humanly possible, if you assume that all economic activity continues as it always did and there's no change, but now we're just taking, what 25% of every transaction, then that's a lot of revenue that I don't understand this idea that it replaces taxes because we have such a huge debt to pay off that you would presumably think that any extra money would go towards that as opposed towards making it so taxes go down too much. But I think that's the extremely generous case that he's trying to push here. And I actually think there's a decent chance he believes it. Again, I don't think that it's, sorry, my 8-year-old just jumped in. It's not my base case at all, but I'm trying to be generous and understand the motivation here. I think that's certainly one of the paths.
Interesting. Legendary, what do you think?
Yeah, I agree with Stats that this is probably the thinking. Looking at the numbers from what we can tell so far, what we know for sure is the US debt, 36 trillion. We've seen those projections, which could say this adds 400 billion in tariff revenue to the US. So there's still a massive discrepancy to close this gap. And Kusho in the comments has been asking if certain industries or specific types of goods and services are exempt from tariffs. There is a somewhat of an answer to that. So the answer right now is the White House has specified that there is exemptions for semiconductors because obviously you need them and that there's always a supply shortage for them. Pharmaceuticals, copper, lumber, specific energy resources, all of those are not subject to these two tariffs. But what they've also have said is, and that is exactly playing into the uncertainty that Stat had mentioned before, is that this might change in the future. So semiconductors are currently exempt, but they have also indicated that there's potentially going to be tariffs for those categories at a later time as well. So we know there's currently exemptions, but how sustainable they are, no clue.
Okay. I like it. Interesting stuff. Final question. I think as it relates to crypto, let's try and tie it back as we close the show today. We don't have much longer. In fact, we've already run over, but trying to tie this back to crypto in some meaningful way. Stats, I wanted to come to you here because you've been tweeting again, kind of repeating the same message about how Bitcoin is performing in this type of market when stocks are also down and gold is up. Wanted to give you a chance to share your thoughts here, how all of this stuff is affecting crypto, how crypto is responding in particular. And then Signal is up with us as well. I want to throw to her in a moment.
Yeah, maybe I'll make it quick so Signal can jump in. But Bitcoin is still doing well, relatively speaking. Bitcoin at 82,000, I think, is still a pretty good result. I think there's still a feeling that, maybe there's a chance that Bitcoin is just becoming a total chaos hedge. It's not trading like that at all. Like it trades absolutely nothing like gold whatsoever, which I think has truly traded as a chaos hedge for a couple decades. One thing I pointed out is that Bitcoin trades more like Tesla than it trades like NASDAQ. It trades more like Tesla than it trades like S&P 500. And my read there is I think that it is kind of like both Bitcoin and Tesla are kind of treated right now as proxies for assets the government will do favors for. And I think that's very real. I think there is just a sentiment that this is like that Bitcoin's one of Trump and his family's favorite assets. So it's like in this craziness, you don't really want to bet against it like stocks, which are much more earnings driven, and earnings are perhaps what's at risk here. But yeah, I think through it all, Bitcoin has traded better than a lot of stuff in this kind of chaotic moment, either because it's people see it perhaps a bit more as a chaos hedge, or more likely, I think it's just very clear that this is that it's something that the Trump family really wants to support. Everything else is a piece of shit. but
yeah, I just wanted to tee you up for that. That particular comparison. I think you've been kind of repeating yourself over and over with the gold comparison in particular. So I thought that's kind of helpful to just bring to people's attention.
What are you talking about? Repeating yourself over and over? 2 tweets.
No, I feel like this is like a multi-cycle thing. I'm talking about like multi-cycle. You've kind of made that point, I think.
Yeah, not really, but maybe because we chat about it in the WhatsApp group a little bit.
Oh yeah, okay. I'm just bringing the private conversations into the show. That's fine. We do that sometimes. Signal, welcome to the stage. Hope you are well. What's going on here? What are you thinking? How do you want to comment on this Liberation Day?
Yeah, good morning on Liberation Day. So I actually see these tariffs as being positive, depending on how monetary and fiscal policy is utilized by central governments. But I think one of the things that people are kind of missing is that the US was incredibly isolationist for many, many, many years, and incredibly wealthy from that, simply because, well, they never got involved in World War II. Therefore, their economy and their people never took, such a hit. But like going back decades ago, manufacturing used to be in our domestic countries. Like I have clothes from going back to saying made in England. And I'm sure many of you have clothes, if you look back to the vintage stuff that says made in your country. And it wasn't until we basically took a more like globalization, a more global view, so like late 90s, early 2000s, where companies started to outsource their manufacturing to Asia because labor is cheaper, that everything got very cheap. That's why Primark, H&M, Zara, and all these brands exist. And by forcing the offshore activity to come back onshore, essentially, you're bringing jobs back to the economy. You're making countries think about where they want to position new startups. So if we go to the US, that looks very interesting because you are exempt from certain interest rates. I think what Trump is essentially trying to do is just make America wealthy what it was 40 years ago. But in order to do that, like B-Check, what you're saying, he has to take such drastic measures. And I don't think the previous administration would have ever done that. Now, going back to what I said, I don't know if tariffs will be positive in the end, because it depends what monetary and fiscal policies are implemented. But I think the idea of actually trying to put production and jobs and sourcing back into the United States is actually a positive thing. Many countries are essentially too chicken head to do it, because it's so controversial that you need a controversial leader. And at the moment, at least in Europe, there aren't too many of those figures. But if Trump makes this work, in the next 4 years, what you will see are much more controversial figures heading EU countries. My only concern is this: if he does that and it brings inflation to the US, how will the US worker actually afford this? Because it might cost $2 to make jeans in Mexico, but you need to pay that same worker $26 in the US, and that is inflationary. So that could lead to obviously many avenues, such as robotics, AI, etc. But there will be many ramifications to these tariffs, but we won't see this play out for the next 4 years.
Appreciate the take, Sig. That's kind of why I was asking the question, like, what is the merit in it then? Because I think a lot of people are enjoying dunking on the attempt, but there were fewer people dunking, or well, maybe some people would do this when they're able to reflect, but there was no specific moment where everyone came out to dunk on the endless set of policies, which, to be fair, it's ongoing, multiple years, both sides of the aisle pursuing this policy that has got the states, and frankly, everyone else is kind of doing the same thing, into this insurmountable amount of debt. And everyone was kind of just going along with it. And so that was why I wanted someone to, I don't know, just articulate the other side as best we can. One thing I would comment on, maybe Legendary, and I'll come to you to close out, as we've gone over, but I thought it was important to go over today, is I completely agree. Again, a lot of people are analyzing stuff in isolation. Just like, if you analyze this, these tariffs just on the tariffs, this is my conclusion. One of the things, and again, I don't know if this is the right thing, but when you listen to them talk at length, I can't remember if it was Besson or Lutnick, they said we want to have the tariffs, and then we want to pair this with lower taxes in general. I heard that number being floated around. It's like, if you earn less than 150K, you'll have like no taxes at all. Look, I don't know if that's the right number. I haven't run the maths, but the point is, there should be things that are dovetailing with this headline policy, which are hopefully going to make things make a bit more sense, or soften the blow that they are going to impose with the tariffs. They're not entirely stupid people, I think. Some of the people behind this are intelligent and know that there's going to be a hit. I think that's, part of this game is that they know that there's going to be a hit. And so they're going to have to work creatively in other ways to figure it out. And so, yes, I think that point is correct. What are the other policies that are going to pair with this to try to deal with the fallout and the negative stuff that will come with it? So appreciate that thought. Legendary, maybe come to you just to close us off now. Any final reflections based on anything Stats or Signal said, which were pretty awesome contributions?
Yeah, I think want to take a final point from Balaji, who also said that they're restoring a single parameter to the 20th century levels in the hope to restore the 20th century. And then my thought on that is, a lot of countries used to be very isolationist, but the world was also very, very different. There was not the need for all those things that we have today. You have semiconductors, AI, electronics. Basically, you have so many things that you use in your daily life that it's impossible for a single country, or almost impossible for a single country, to build all of them. Maybe China can pull that off, or maybe a country like India could pull that off, but it's extremely hard to do. And I think this is also the reason why we're seeing those exceptions for copper, for semiconductors, for pharmaceuticals, and some other things. That is kind of a reflection on the fact that you can't truly be isolationist, but I also feel like this is completely understating the complexity of supply chains, because just have an exemption on semiconductors is not going to solve for the fact that wherever those semiconductors are being produced, whether that's an Austrian company who's manufacturing a lot of them, a German one as well, or a lot of them coming from China, there is complexities in their economies and supply chains as well. And tariffs that might have an exemption for, or the tariff exemptions that might exist for semiconductors are not going to solve for the semiconductor imports, because you will have a local economy around that company that is producing those semiconductors. And I don't know, they might have some other economic aspects that are very specific to them, some other exports that are happening, and which are heavily then impacted by the tariffs. And then again, it's the intention is to say, yes, we can't be completely isolationist because we need those things, but by still having flat tariffs on everything else, you basically are kind of understating the complexity of a supply chain by just saying, if I have the exception for the one thing that I import, there's not going to be any like secondary effects of the other flat tariffs that I've imposed on everything else.
Good stuff. Excellent final thought. Look, as we've said before, this is frankly above all of our pay grades. We're doing our best to summarize, synthesize, evaluate the information that we have available with the intelligence that we have available to us, which is maybe limited when it comes to these specific topics. But we hope that was a helpful conversation on tariffs and what we can make of the situation based on the limited information we have. Reminder, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. We're live on X video, Apple and Spotify podcast too. Hope you found that interesting. Thanks to Legendary for co-hosting, and Stats, Signal and Funky up on stage with their awesome contributions. As usual, we'll be back again with you tomorrow. I'm sure we will have more to discuss. Have a wonderful day. Take care, and we'll see you tomorrow. Bye-bye.